Hi, if you are in finance or accounting area, you should know that International Financial Reporting Standards, IFRS, is becoming very important and globally accepted qualification. In this course, I am going to teach you the International Accounting Standard 16, the property plant and equipment. These standards provides rules and the treatment of the non-current assets. Being able to successfully complete this course, it will help you to understand and extend your practical knowledge on the property plant and equipment. Either you want to apply it in your career or you want to sit the exam. So this course is specifically designed for accountants, auditors, and students. Before we go any further, let me introduce myself. My name is Tom. I am a financial auditor, and you are highly welcome to my educational platform. All my hope is that being able to meet your expectation. So let's get started. The study guide for this course, you are going to learn from this course as the following topics. First chapter is going to explain and provide the overview of the property plant equipment. There's chapter 2 is going to address the key definitions that provided by IAS 16. Chapter 3 is going to be about the recognition of the non-current asset. Chapter 4, we are going to explain and provide the measurement of the property plant and equipment that are provided by IAS 16. In chapter 5, the depreciation accounting, which is one of the most important topic in this standard, because mainly the problems is coming from the depreciation accounting. In chapter 6, we're gonna have the review of the useful life. In chapter 7, the impairment of asset values. In chapter 8, we are going to discuss how and when we should de-recognize the property plant and equipment. And before we conclude, we will provide the questions and solutions from the practical view. And lastly, we will have the conclusion about our course. So IAS 16 initially issued in 1982 and then reissued in 1993. Again, it issued in 2003, and then followed by many amendments. The effective date for the current standard or the version, it has been since the 1st January of 2005. We need to put clear question here. Why do we need to learn this standard? Why do we should have the clear background, and as financial people who involved in finance and accounting have to know those standards? So IAS 16 is one of those standards. You as the accountant or the finance area, you need to have clear backgrounds of those standards. So IAS 16 prescribes the accounting treatment for the property plant and equipment because it sets the initial recognition criteria related to an item of property plant and equipment, deal with the subsequent cost. Also, it prescribes the rules for the initial measurement of the property, plant, and equipment, we are talking about the component of cost. In relation to the subsequent measurement, the IAS 16 provides two options. That entity has to select from these two options only one option and has to be stick on that the model which the entity selected. So two options are the cost model and reevaluation model. In the cost model, the asset is carried at its cost less accumulated depreciation and impairments loss. So this is the common use cost models. On the other hand, we have the reevaluation model. In the reevaluation model, the asset is carried at the reevaluated amount calculated as fair value at the date of reevaluated less subsequent accumulated depreciation and impairment loss. And this model mainly used for the land and buildings. So the key definitions that we need to talk in the chapter 2 as IAS 16 provides or gives a large number of definitions, and as I said, you need to be familiar with those definitions, otherwise you will have misconception of the IAS 16. You might not able to differentiate or distinguish between the definitions. So what does mean the property, plant, and equipment? Before we explain anything or I explain anything, please bear in mind that there are two types of the assets: tangible assets and intangible assets. Tangible assets, that are the assets that we can touch or remove or move them. Intangible assets, that we cannot touch them. It means it has no physical existence. For example, computer software. We cannot touch computer software because it has no physical existence. This asset is addressed in another standard, and we should cover that in next course. But here we are talking about the tangible asset. Tangible asset that we can touch. For example, buildings, computers, machines, office machine, and kitchen machines. All those things have physical existence. We can touch them and we can move them. So here, this standard is designed specifically to these tangible assets. So IAS give definitions for the property, plant, and equipment item. The are tangible assets that are held for the production or supply of goods or service, or rental to others, or for the administrative purpose. It means these assets, in order for you to classify your asset as fixed assets or the property, plant, equipment item, you should ask yourself for what you are going to use this asset. If you are going to use these assets for the production, it's okay. For example, production machine in manufacturing company, or supply of goods or service. For example, if you have vehicles that you use to provide service or goods to your customers, this vehicle is classified or defined as fixed assets. Or rental to others. You might have building or part of the office, and you need to rent this office, which is classified as fixed asset to others. Or for the administrative purpose. So let's say constructing company builds its own head office, and this head office is classified as property, plant, equipment item, because the main the ordinary activity for that company is buildings, constructing buildings. But one start use this part of the building or part of office for the administrative purpose is define it as the tangible asset or fixed asset. And the second criteria that should be met are expected to be used during more than one period. It means we are intending to use these fixed assets more than 12 months. As you know, the financial period in accounting is 12 months. So we are going to use these assets more than 12 months. It means there should be depreciation charge should be applied, and we need to capitalize these fixed assets over its useful life. The second key definition is the cost. What does mean cost of the property, plant, equipment? Well, the cost is the amount of cash or cash equivalent paid or the fair value of the other consideration given to acquire the asset at the time of its acquisition or construction. It means the money that we paid to acquire or to obtain these assets, or the fair value. So please, if you don't have the clear view or a good background for the fair value, you need to study or have a review on the IFRS 13, the fair value. And then we need to talk or explain the residual value. What does mean the residual value? Well, the residual value is the net amount which the entity expects to obtain for an asset at the end of useful life, less any expected disposal cost. So as long as these fixed assets or the property, plant, equipment will not last forever, it means it has useful life, maybe 10 years, 5 years, 12 years, 70 years. However, one day will this asset either be disposed or scrap it. So when we dispose or scrap out these fixed assets, there should be residual value. This residual value may be zero, maybe $2,000, $3,000. So this amount is called residual value. The carrying amount. What does mean the carrying amount? Well, the amount, it is the amount at which an asset recognizes it in the statement of financial position after deducting any accumulated depreciation and accumulated impairment loss. What does mean? Well, when the financial statements are provided or prepared, they should be the fixed assets or non-current asset. So under the non-current asset, there, let's say you have vehicles or buildings. These buildings, each financial year, you need to account the depreciation. It means accumulated depreciation. The carrying amount of the asset at that time or at that day, it will be the initial cost, that the cost that you paid to initially to acquire this asset, less accumulated depreciation and less any accumulated impairment loss. The fair value. The fair value is the price that would be received to sell an asset or paid to transfer a liability on ordinary transaction between market participant at the measurement date. Fair value means the amount that is available in the market. So let's say you have a building, and this building before COVID-19 its value was $50,000, but today its value in the market has been decreased significantly, let's say $20,000. So its fair value today is $20,000. This is the fair value of the asset. An impairment loss. An impairment loss is the amount by which the carrying amount of the an asset expects to recoverable amounts. So the comparison between the recoverable amount and the carrying amount. In the next chapter, we will look at the recognition of the property, plant